Okay, we have a few people that'll still be joining us, but I'd love to at least get started and welcome you to Feasting on the Opportunities in the Food Industry. My name is Craig Miller. I'm CEO of ACG Chicago, and I'm proud that we're able to host this industry event today. For those of you who are not members of ACG Chicago, please get to know us, get to know the members here. Look on our website, find and dig a little deeper into the capital providers, the corporate executives, the strategic advisors, and all of the senior leaders in corporate growth in the Midwest that belong to this 1,000-member chapter that's a part of a global organization that's 13,000. I would also, while we're doing the initial introductions, like to thank the sponsors of today's events. They've made it possible to be here. William Blair, Blake's, BMO Harris, Duff & Phelps, First Midwest Bank, Grant Thornton, Lazard Investment Banking, and McGladrey have all stepped up to not only bring you the event today, but help us record it, bring some white papers in that you haven't seen yet, but what you will see is a e-publication that will have today's presentations, the publications, profiles on the speakers, and all the other information electronically sent to you so that you can both have notes from today's program as well as additional information in those other white papers and other documents. So we're trying to step into the 21st century as well and keep in touch with you beyond this program to see what else we can do. Once you get those, please feel free to tell us what else you're looking for, other documents, other information, other trends that you may have heard about today and want to know more about. Their support is also augmented, or I want to at least thank Terry Cobb, Angie Hoffman, and Jim Hennessy, who just joined us from the ACG staff. I also want to thank Dustin Weinberger from GE Capital and Dave Heinke from Grant Thornton. They were key in helping put together today's program. And I wanted to recognize Stu Dolan, who spearheaded this program. It was a driving force behind the development, and we lost Stu all too soon last month, and hope that the work we do here today lives up to his standards, and believe that we've put together a good program in spite of that. We hope we are bringing you thought-provoking insights into what the last couple years have meant and what it means to the Midwestern food industry. I know there may be some words of caution from our first speaker and some hopefully hopes of visions of optimism and success from our leaders who will speak to you in the panels. We've had some panel calls and there have been some great discussion already about what will be presented today, so we're looking forward to that. And I just want to simply note that the network that extends beyond the people here in ACG should be open to you, and it provides you both capital, access, advisory, and great skills to expand your businesses as well. It is my honor to introduce our first speaker today, Ron Paul. Is CEO, president, and founder of Technomic. He started the firm in 1966. He's responsible for the overall management, for the development of the practice areas, and maintaining their high-quality standards, which often draws him to be a speaker or be quoted in media like the New York Times, the Wall Street Journal, USA Today, Business Week, Newsweek, CNN, CNBC. His firm is a leading source of market research data on the food service industry. They provide regular reports that track the market performance of individual companies and brands, as well as industry trends. And they also provide custom research and market consulting for food manufacturers and distributors, restaurant chains, and related trade associations. Obviously, this wealth of knowledge and research will allow Ron to set the table for our discussion on what's in the menu for our feasting on opportunities in the food industry.
Really appreciate the opportunity to speak to you, and it really is a very interesting time to talk about the food industry, because as you'll see, the industry has also been reacting to the general economy. So what I basically want to do today is show you what we see as the high-level view of what's taking place. If it were normal times, we probably wouldn't even mention the economic situation, because in general, it's been positive enough that there hasn't been any major negative impact on the industry. But this recession is different than we've seen before, including going back to the couple prior ones, back in 80-81 as an example. So what we're going to cover is basically the economic situation briefly, because you all know what's going on. You read the papers like I do and look at the internet, etc. But more importantly, we'll share with you some consumer research findings. And I want to put this in the context that all of us are consumers. So we're going to talk about the consumer as if it were somebody else. But we're really talking about ourselves. So you should be able to draw from your own life experiences and how you've changed some of your habits and attitudes as a result of what's gone on with the economy. And then the industry is so big, I had to decide what to cover with regarding industry performance. So I've decided to basically talk a little bit about food retailers, a little bit about food service organizations, and then very briefly a little bit about food processors. Obviously, there's many other areas, ingredients, equipment, etc., that make up the food industry. The industry is simply too large to try and attempt to cover it all. So hopefully we'll cover some of the areas that might be of interest to you. Then we'll basically cover some trends. We want to close on reminding you that there are still some very favorable factors that are going to drive the continued longer-term growth of the industry. Particularly, you can debate whether it's going to be on the food service side or on the retail side. But we know that consumers will go back to some of their old habits. The question may be how often and when. So let's begin. Let's take a look, first of all, with the economic situation. Headlines would be very simple, and you know these. DPI is down. There's been no employment growth of any significance. Consumers are not confident, us collectively, and consumers have cut back on spending, not just in food, but obviously other areas as well. Let's just very quickly take a look at some of the data. This shows you the real change in disposable personal income going back to January 05, and you can see how the trend has been down. Now there is that spike in March of 08. What was that? Who knows in the audience? What happened that drove that up? The stimulus payments, the tax reductions that were made, the checks that were mailed, etc. If you took that out, it would have been down to something like the 0.2%. If we take a look now at the employment numbers, 1 out of 6, if you really look at what's called the U6 number on the census report, are either underemployed or unemployed. So while we all look at that roughly 10% unemployment rate, we think at Technomic the more important number is the 16.7%, almost 17% of the workforce. And this doesn't take into direct count, as Bob Golden, one of my associates is here, often points out, the fact that some of these folks are working, but they're working at less wages than they used to be making. So there's been that as another negative factor. Consumer confidence, again, very, very negative. I mean, it bounces around a little bit, but we can see that it's down at that 50% using 1985 as 100. So we've got a long way to go before consumer confidence returns to anything normal. So if you put all that together and then look at what else is coming down the pike, one has to say that on an overall basis, there's some cause for concern. This chart, which shows the producer price index, which tends to be a leading index of what's going to happen to the other numbers up there, the consumer price index for food away from home, that's the FAA, and the CPI for food at home. They've been low, but most forecasts that we're reading today, and we are not agricultural economists, suggest that we could have some real inflation in food prices, which again is going to have an impact of a negative type on some of the concerns that already are haunting the food manufacturers, retailers, and distributors, literally. So, conclusion, the economic environment has impacted the industry rather significantly this time, and it's got to be a factor that we watch going forward. So then the question becomes, how has all this impacted the consumer? Again, us. Well, let's take a look at some of the survey data that we can share with you. Where we are today, I guess you could put it in several buckets. Tentatively emerging from the recession, and the word there is tentative. Coping with trade-offs. We've learned, consumers have learned, that they can't have it all, and they have to decide how they're going to spend their discretionary income. Where's it going to go? Are they going to vacation near home, or are they going to vacation at all? So what are we going to do to not only protect what we have, but what if we do lose our job? That's still a fear that exists in many consumers' mind. So while they may be employed, that lack of confidence in where we are and where we're going is a negative. Reevaluating past behaviors. We used to always buy new cars. Do we really have to buy a new car? What's wrong with a car that's got a warranty, got a couple years left on it? We don't suffer that depreciation. Do we really need to spend the money on that car? And as you all know, car sales are hoping for 11.5 million this year, which is way down from what we used to see sold in America. So they're indulging selectively. We still once in a while want to splurge, just not as often. So we're much more selective on what we consider our splurges. And again, back to that same old factor, overall, the consumer is lacking confidence in where we are and where we're likely to be going, at least over the near term. We basically asked on a 4-point scale, how concerned are you with a whole host of factors? And these happen to be the 5 highest rated. Now, they're not directly related to food. We'll get into food in a moment. But 87% of consumers are either somewhat concerned or very concerned about healthcare costs, their own household financial situation, income growth, the price of groceries, and again, another one on healthcare premiums. All the publicity about healthcare premiums going up is definitely having an impact on consumer attitudes. If we now take a look at how this has impacted you or your household, the top 3, debt has increased, 34% of consumers say that's happened to them. Investments have lost value, almost a third again. Income has lost value. And then the home has lost value. And then if we look at how their income has been effective, 23% of the households have had some type of job loss. They may be reemployed, but somebody in that household did lose a job. Or pay cut and salary. So again, the backdrop to all this, and now we'll start to dig into food a little bit more, is a very negative attitude on the part of consumers on a fearful basis as to what's coming next. And if we ask them, on an overall basis, how would you classify your current financial situation? Struggling to make ends meet. And now we're going to compare that with what it was just back in December. This survey data was just completed within the last 2 weeks. Struggling to make ends meet, 4% up. Getting by, have managed carefully, almost a majority, 51%. And those living comfortably was 19%. That's dropped 4 percentage points since December. So from that point of view, you can't suggest that the trend has necessarily improved. Now, getting to food. Overall, we collectively are more thoughtful about food spending. We're less inclined to take risks when we're, quote, away from home. That's what the AFH is. We're trading out often rather than trading down. Meaning, you'll see in a moment, the data suggests that consumers are basically moving some of their meal prep back home and away from restaurants. 89% are consciously doing so to save dollars. So more meals at home is it. And final point on the slide, 51% agree restaurant visits have shifted from everyday to a form of indulgence. And anytime you listen to any of these economists, kind of home economist type, telling consumers how to save money, or you read the column, you don't need to go to Starbucks for a $3 cup of coffee. Food service is typically high on the list of what they suggest are areas where you can cut back and, quote, save a lot of money by giving up some of your food service habits. So, what's happened? What are you doing for those meals that you used to get at restaurants? The number one, preparing meals from scratch. Now, we know from other work that from scratch doesn't really necessarily mean all the way from scratch. It may be more meal assembly than really preparing. Buying frozen meals and convenience food. A third of consumers reporting that. More brown bagging, almost a third there. Making coffee at home as a way to save money. And buying retail meal solutions, meaning prepared foods available from retail outlets, whether it be Whole Foods or Walmart or Costco or any place else. Literally prepared foods, which are oftentimes advertised as direct substitutes for restaurant meals. Again, 90% agree that cooking at home saves money. So we think the overall climate here, you can see why the attitude towards more meals at home is so prevalent. They're taking steps to economize when they go to restaurants. We asked in terms of how you're economizing to save money at restaurants, 85%, well, we just spend less dollars. How about stretching dollars further? Yeah, 79% we're doing that. Well, how do you do that? Eat out less often is the number one factor. Use coupons. Groupon has been one major success in lots of areas, including restaurants. Skip extras. What are extras? Appetizers, desserts, 1 glass of wine instead of 2, that kind of thing. Go to less expensive restaurants. They've traded out of casual dining to fast casual. So they will go to a Payway or a Panera or a Chipotle versus going to a sit-down full-service restaurant. And then, quote, follow the deals. So this economy-minded consumer pattern is very much in evidence. But the same kind of thing has been happening at grocery stores. Again, significant percentage spending less, 83% trying to stretch it further. How do they do that in the grocery environment? Buy sale items, use coupons, buy less expensive items, oftentimes basically the retailer label, if you will, private label products, buy store brand products, and skip extras. So again, same kind of tactics being used both on retail and the grocery side. Now, we asked them, what do you see coming with regard to the economy and the outlook for next year? And again, we're comparing that in terms of what the change was from December '09. Improved significantly, down. Improved somewhat, was up. Stay the same, very significant. But look at the bottom two, worsened somewhat. Up 11% and worsened significantly 5%. So there's been a 16% jump in those two categories, which doesn't augur well for a quick return of consumer confidence. Of the things you've cut back on, what do you think will be the first to come back? The two top ones happen to be in food, grocery store spending and meals at restaurants, vacations, and then clothing. And then, interestingly enough, almost 10% saying, no, we've made some long-term shifts. Some of our spending isn't going to come back to what it used to be. Where we're going, what's the result of all this? Well, we think, again, we should expect what we'll call conscious consumption, thinking about how we're spending our money. Emerging fatigue with frugality. Now, this sounds like the opposite of the first, and it is. We get tired of cutting back. We get tired of staying home. We get tired of trading down. So there's going to be a shift again in terms of some of these old habits coming back. So we are going to want to treat ourselves, indulge, you deserve a break today kind of thing. However, we think the stigma tied to extravagance is probably going to last a lot longer. Somehow it seems wrong if your neighbor's unemployed or there's some other situation that affects you indirectly that you want to show off the spending that you used to do. Treasure hunting, again, looking for bargains, deal seeking, but demanding that that's a good deal when you get it, and then a greater awareness of hidden costs, meaning such things as how long things will last. It isn't necessarily reflected in the price, but if you're planning to keep your car longer, will that car hold up as well as car number 2 over here? So lots of consumer attitudes that need to be watched as we go forward. So let's briefly now move to how has all this impacted on the industry. We'll start with grocery retailers, and what we're showing you here is the percent change in revenue for typically second quarter, and then the margins for 2010 versus the margins they enjoyed in 2009. And we picked 6 of the major, quote, grocery retailers here. And you can see the top line challenge on revenue has been pretty significant. And if you take a look at margins, margins of course are quite low compared to what you'll see for some other aspects and areas of the food industry. But again, the trend has not necessarily been that robust. You can see it's kind of a mixed bag in terms of increases versus decreases. But the point is there's no indication when you look at this slide that this is a high growth segment or that margins are definitely trending up. Continuing with grocery retailers, let's look at some of the same store sales results for Q2 10 versus Q2 9. And again, if you take a look at Q2 10, A&P actually down, Kroger down, Safeway down, Super Value down, Whole Foods up, the exception there, and then Winn-Dixie. But again, you can see the negatives that appear here, And if we dug into the food service side, we'd see a very similar pattern. We'll take a look at a little bit of data on food service in a moment. So if we now take the government data, now this is the whole industry, this is from the Census Bureau, what they're reporting concerning grocery stores. January to June '09, that period, the industry was down, per the government statistics, 4.1. A little improvement if you look at, again, the overall industry, July to December, down 3.5. And the most recent period, January through July, first 6 months, up 0.1%. So on an overall basis, even though we're not seeing it in some of the leading players' results, there's some indication that things have firmed up. And that's why we said earlier on, some indication that we're moving up from the bottom of what the recession has done to the industry. Now let's go to restaurants or eating and drinking places. Again, take a look at the pattern. Negative 2.8, negative 2.9, but again, for the most recent, actually this is 7-month data, we're showing a 0.9. So again, it has turned slightly positive for the overall industry. If now we look at public restaurant chains, and there's about 90 public chains that report same-store sales on a quarterly basis. LSR stands for limited service restaurants, meaning fast food and fast casual. FS is full service restaurants, waiter, waitress service. Again, take a look at the pattern. Limited service has in general done better than full service. And again, McDonald's just reported a strong quarter. But in order not to distort the results, because this is a weighted average based on the size of the chain, we take McDonald's out of these numbers, so they're not reflected in here. But again, we take a look, we can see that we're barely at break even in terms of 2010, in terms of these chains, same-store sales. And if you were to dig deep into the numbers, you could find plenty of examples of restaurant chains that are down 10 and 15%, and in many cases down 15 to 20% from where they were in the year 2000 if you adjust for inflation. So casual dining has really been the major one, hit the hardest within the public restaurant chain business. Food processing, just ever so briefly. Again, we're taking 5 large companies here. Now, Kraft is distorted because of Cadbury. So if you were to take that out, it's a different situation. But again, taking a look at the margin situation, General Mills, again, a leading player, Kellogg, Kraft, Sara Lee, an improved quarter, but the question is, how long will that last? And then Tyson, slightly better margin. But again, no indication of strong, robust, organic growth from these players. So, I want to close with some overall trends, which I think are overall going to be just that, more important in the long term than they are short. And here are some of the trends that we'd suggest you want to keep your eyes on, many of which are going to be favorable to some players and perhaps not as favorable to others. There's no question there's an evolving business in health and wellness type products and services, and that's surely going to continue to have an impact. We don't think that the idea of menu disclosure is going to be that significant in turning consumers off on the foods that they want to eat. It hasn't been in the grocery environment, so no reason to think as it spreads and as part of the healthcare reform bill that it's going to have that much of an impact on restaurants. But there is this desire for authentic eating and more grazing, more small plates, more tapas-style foods. Snacking continues to be something consumers are gravitating to, both in the away-from-home and at-home situation. This idea of local foods, closer than it is to where the restaurant or grocery outlet is, the better. And then overall, I think another very positive is the foodie orientation, number of food shows, what the Food Channel's been able to achieve. So the interest in food is deep and wide, and I would say continuing to grow. And this exposes consumers in an indirect way to lots of new things they want to try. And most often they'll try those in the restaurant environment, not necessarily at home. And then the last two seem like they're opposite, and they are. One meal will go for comfort food, and the next time we'll go for indulgence. So we're going to continue to vacillate and make our own adjustments in our diet as we go forward. So there's nothing wrong with skipping the potatoes but having a piece of cheesecake at the end of the meal or sharing the cheesecake. So indulgence is still going to be part of what we do. But in this environment, we've seen the growth of the burger chains as an example. We're going back to the old familiar, less experimental perhaps, at least as far as most consumers are concerned. So again, these are what we think are important drivers, and obviously probably within each of these you can find an opportunity. But that's not all. What kids are eating is totally different today. Children's menus, if you haven't noticed, have changed very significantly. Kids are eating sushi on a regular basis. It's a lot more than macaroni and cheese. The whole industry, and this is true retail and true food service, got to take better care of the customers. Make the experience better. The customers are going to basically be more loyal to your place of business. Again, we touched on this earlier. Focus on fresh and natural. Organic, yeah, maybe, but lately it's a little bit too expensive for us, so there's been some softening in the organic products. But we still want better quality. We know what quality is, and we know it's getting better. And the bar on quality never goes down. Expectations only rise. You expect your next car to be better than your last car, your next TV to be better than your last TV, and to some extent, your next meal to be better than your last meal. The idea of restaurant quality at home is kind of the buzzword that a lot of grocery retailers are trying to get across. And new retail formats that could be smaller stores in the case of the retailer, and surely within restaurants, it's going to be smaller restaurants as well. So the quick casual restaurants, the Paneras of the world, those kind of places are not the size of a Chili's or a Fridays. They don't need to be. And then again, we're going to have an evolving definition, or redefinition, I should say, of cooking. So all these things are going to basically contain opportunities, and they are continuing to be longer term trends. And then finally, I want to close with one of my favorite quotes, which is, if past history was all there was to the game, the richest people would be librarians. And take a look who said it. So thank you for your attention, and we'll be happy to take some questions. In the back. Okay, the question is, what's the impact of food safety? How is the E. coli breakouts, all that? It's probably the biggest scare in the industry. If you wanted to talk about threat, it would have to be right at the almost top of the list, if not the top of the list. So our attitude is that we're going to see more regulation. We're going to see tightening. The industry has to get back behind it to a much greater extent than they have, because consumers are affected. I mean, trying to sell, what's the best example, perhaps, poached eggs in the Midwest the last couple months over easy, that kind of thing just didn't work. It was interesting because we talked to restaurateurs in other parts of the country where they know the eggs didn't come from Iowa, no impact on their business. But in the Midwest here, it definitely is a negative. And we've seen chains almost, if not destroyed, by breakouts. There's been a couple in the Mexican area as a result of, if you will, food poisoning from guacamole. So it's a big industry scare, and has to be taken very seriously. Other questions? Yes, sir.
What's the sample size that you use for
Bob, where are you? 2,000? 2,000 consumers. Pretty well balanced, right? 18 to 65? Yeah. Good question. So the error range is plus or minus 2-3%. Other questions? Yes, sir.
Are the food service operators as pessimistic as their customers?
Good question. The operators as pessimistic as their customers. We just did another survey for a meeting that we're having next week with the trade association. And they're slightly pessimistic, but they're less pessimistic than they were the same time a year ago. So there's an improved optimism. I think they've done a lot of cost cutting. They're finding they are getting traffic gains. The problem is trying to get margin gains. The industry has been helped, if you look, and I'm sure many of you do, at stock prices and PE ratios. They continue to be fairly high for restaurant companies because they've been able to achieve great, if you will, bottom line growth in some cases without any top line growth because commodity prices have been favorable. But I think there's a concern as to whether that will last. But they would tend to be concerned, for sure, and don't like the discounting that's taking place. It's having a major impact on bottom line. If they turn off the discounting, the customers don't come back. So it's, but we've said for a long time, restaurants are not immune to discounting. Every form of retailing has discounts and sales, so why shouldn't restaurants? So it shouldn't be a surprise. How much time we got left? One or two more, okay. If there are one or two more.
Let me ask you, what are the two or three points you talked about, CPI and other ones, that would be the turning points for you in the next 6 months if you saw something rise, change?
Good. I think in the past we would have said DPI probably first. I would think we'd probably say now we'd look at employment and consumer confidence. We don't think we can get back to where we were until we really see some growth in employment. And that could be a concern because many, quote, economists are predicting that's going to be a long time coming back. Consumers have to have the money and have to want to engage in what still is a discretionary expenditure. Food service tends to be a leading indicator because you have, to make it simplistic, 21 times a week to decide how to spend your money and how much to spend. So you can make shifts. It's not like buying a refrigerator. So we can see upticks very quickly in the data. And in the past, it's always correlated very highly with employment and with disposable personal income. This time, because employment is so large, we're paying more attention to consumer confidence. That's probably a better indicator on trading down, spending less, but not necessarily how you basically spend your evening. I was noticing this last week, and Bob again and I have talked about this frequently. The cost of coming downtown if you live in the suburbs for a dinner on a Saturday night, when you factor in babysitting, you factor in $15 to $20 to park your car, and then you factor in, if you're lucky, $10 to $15 for one glass of wine per person, it gets to be a very big number, and do you really have to do it? So it really is a very discretionary expenditure, hence why so many of the truly, quote, upscale chains have done so poorly in this environment. One more? I wouldn't be that comfortable commenting. Bob, do you have any comment on that? No, we don't really track that. My guess is that right now exports are very good. China's become a big buyer of many of our products and are having an impact, for example, as I understand it, on beef prices in particular. So it's probably going to be another factor that leads to some of this inflation in the producer price index that we're seeing. But I really can't drill down on that topic. Okay, let's stay on schedule. Thanks for your interest, and look forward to seeing you again.
Ron, thank you.
Thank you.
I have a little gift for you.
Hello, everybody. My name's Dave Heinke, and I'm with the public accounting firm of Grant Thornton, but I'm also a board member here at ACG. And I've been fortunate over the last few months to be on a committee that helped put this event together. And what I'd like to do today is introduce Dave Fasaro. Dave's editor-in-chief at Putnam Media, where he actively is involved with Food Processing magazine. Dave, you've been there now for probably, what, almost 20 years?
I've been on food processing with
But with Putnam, probably about 20 years?
writing food about
20 years. Before that, he was a graduate of Marquette. We won't hold that against him. Cheesehead. But do want to thank Dave also for putting something together that Grant Thornton's fortunate also to participate in. We've got a knowledge center out there that Food Processing magazine has helped put us together. It's a knowledge center out there that talks about a lot of trends, issues, data relative to food processing that you can access at foodprocessing.com. I'll let Dave give his own little testimonial infomercial about Putnam Media and about Food Processing magazine. But ladies and gentlemen, when it came to me to try and find somebody to be the moderator, Dave's got a great mind about food, and we welcome him to participate and to moderate today. Dave, welcome.
This is going to be our panel discussion we're still going to do this after a break. I have a couple of slides I'd like to show you before the break, but we'll get back to these guys in just a minute. This is Food Processing magazine. You know what? I'm glad I'm doing this actually before the break because that Ron Paul guy is such a negative guy, such a gloomy Gus. And he's talking, most of his data is about the restaurant industry and the food service industry. And in food processing land, everything is great. Everything is rosy. It's completely opposite of everything that Ron Paul just said out there. And in fact, a lot of the data and a lot of the trends he talked about, people going out to restaurants less, trying to economize, they're cooking more at home. Food processors are the beneficiaries of some of these trends. I mean, they've had some tough times as well, but a lot of the trends, the macro trends that are driving people out of restaurants are driving them back to their homes and driving them back to making food at home and back to the traditional food processors. And this is our magazine, by the way. And everything, all the data I show you is going to be relegated to that segment of the food industry. Food manufacturers, the Krafts and the Heinzes and the Coca-Colas of this world, not upstream from there to the agribusiness side, and not downstream from there to retailers or to food service. Everything that we look at is just what would happen within a Kraft or a Heinz and within the walls of their manufacturing facilities. So food and beverage processing, as we define it, well, as the Department of Commerce defines it, is about a $500 billion industry. It accounts for about 10% of all U.S. manufacturing. Well, you can see the numbers up there. A lot of facilities, a lot of employees, and yet a lot of them relatively small. More than 80% of the establishments employ fewer than 50 people. So it's not a cottage industry by any means, but there are behemoths, of course, the Cargills and the Krafts, the Coca-Colas of this world, but there are a lot of small companies that produce a lot of our food. It's a good thing and a bad thing at times. We do, at Food Processing, a lot of our own original research, a lot of surveys during the year. We do the same ones every year so we can see trends from year to year. This is our annual manufacturing trends survey. And if you ever see a date on the screen like this appears in our magazine, January of 2010. Most of the research then, the survey was done probably 2 months prior. So this is probably a gauge of sentiments, right before Thanksgiving of last year. We did a couple of surveys, early in the year on the cusp of the new year that I think are pretty interesting in terms of setting a tone for what 2010, well, back then what we thought 2010 was going to turn out to be. This survey, and it's a base of about, I think, 300 or 400 respondents, goes mostly to our plant operations people. My magazine goes strictly to, again, the food industry, the food manufacturers, but we go to every food category, beverage, frozen foods, dairy, even fresh fruits and vegetables. And we also go to every job category. We have plant operations people, we have R&D, lab people, and we have management, sales, marketing people as well. This survey goes just to the manufacturing people and ask them about their manufacturing priorities for the new year. Anytime we take a survey, anytime we mention the word food safety, it's always the number one answer. It's certainly a truism. It's also, the answer you have to give. I don't think food safety necessarily keeps people awake at night. When it's not a problem, it's not top of mind, everything's working fine. You've got a lot of more imminent things to deal with. When it becomes a problem, it becomes a potential bankruptcy problem for you. But nevertheless, food safety, always the number one answer. For this year, and again, right on the cusp of the year, or right around Thanksgiving of last year, their great concerns were things like sourcing and materials, labor, energy issues. Well, you can see the list at any rate, but there hasn't been a whole lot of change in this, except that energy issues, were much higher in previous years when energy was a concern. And environmental concerns probably have never been this high. There's a big movement, of course, not just in the food industry, but everywhere, to be green, to be socially responsible, and and there's some movement in that. Also part of the manufacturing trends survey, we asked them what we anticipate their plant's production to do in the new year. And let me look at my notes from last year. You can see the numbers this year, and they're actually pretty rosy in terms of people predicting, 16% predicting an increase of 20% or more, 20% increasing at least 10%. When you add those three increases up, that's 68%. 68% expect an increase of at least 3%. That's plant capacity, throughput in their plants this year. Now that number last year was only 57%. So that's a pretty healthy increase of how they thought they were going to run their plants for this year. And the last slide of the survey, we asked about 20 questions, but one of them is just a general touchy-feely question. How do you feel going into the new year? Do you feel more optimistic than you did last year, or less so? Well, there's quite a big jump. It's about, I think the number was 66% In 2010, the number last year at the same time period, at the cusp of 2009, was only down around 42%. So there was a lot more optimism going into this year than there was last year. This is a different survey, not so much a survey, but an analytical report we do. We call the annual reports and SEC filings from, I think it's about 30 or 40 of the publicly held food processors. And we look at their capital spending, what they actually spent last year and what they're budgeting for the new year. So this is after their final SEC filings for calendar year, fiscal year 2009. There's actually a typo in this too, and I want to correct that with you. Every year, we've been doing this for about 6 or 8 years too, and every year there's a nice little increase, some 4%, some 6s, it goes up and down, but it's always an increase. Last year when we did our survey, and that would be 2008, we did it in 2009, was the first drop we ever saw in our capital spending report. And the numbers are wrong. Well, there were 2 things we saw. When we do this survey, we look at the annual reports, so it's about, like I said, maybe February or March of the new year. They budgeted a decrease of 2.9%, 2009 over 2008. So they were already budgeting a decrease for last year. They saw, the writing on the wall, and they knew what a bad year it was going to be. But they actually, when we looked at their 2010 or 2009 fiscal year filings in early 2010, they actually spent less than they even budgeted, and actual capital spending was down by 15%, not this 8.7. So they budgeted down 2.9, and they actually spent 15% less on capital spending in 2009 than they did in 2008. Kind of symptomatic of how bad the year was. But when we did the same survey in early this year, collectively, and we're talking about a base of about $13.5 billion of capital spending. So that's, like I said, 30 or 40 companies. 19.5% increase this year over what they actually spent in 2009. So, a lot of optimism, at least coming into the year. I'm not sure, if that's holding up. And we have some people, some food processors on the panel discussion that maybe we can ferret that out. Oh, we're going to go back into the session. So I just want to paint the picture that, especially in contrast to what Ron Paul did, food processing is food manufacturing is not a sexy part of the business. Even in a bad year, though, it still grows at about 2%. And in a really great year, it can grow as much as 2.5%. So it's not sexy, but it's relatively recession-proof. I guess your job as financial people in the audience is to look for the stars, the people that are going to outdo that projected growth rate, but knowing at the same time that the bottom is never going to fall out of that market. People are always going to eat, and trends that drive people away from restaurants and food service just seem to drive them back to cooking at home, which means food manufacturing in the traditional sense.